have you, man, was I having a great morning. Woo!
What happened to it?
I got trumped.
I got trumped too. I think we all got trumped. Or I trumped myself.
I'm telling you, I've dealt with, I'm not going to say, I've just dealt with more reasonable car salesmen. Everything's like a bait and switch. It's a bait and switch in rhetoric. That's why I say that. It's like yesterday, not that I fell for it, but it was, but here's the classic case. Because I had been long Euro. I bought the Euros yesterday when I was sitting in the airport and listening to Lagarde, because we'll get to that. I know that's. And then I got out of them, you know, about 10 to 4 Chicago time, because they started to, you know, they rallied. I said, yeah, I'll wait for the British election results. Of course, we know how that, so the euro had opened 70 ticks higher. I said, I'm not chasing it. So I was able actually to buy them all back, basically where I got out, maybe even a little better. So thank God I didn't fall for that trap. I missed that one. I don't know how they missed me, but they did.
Yeah, that whole thing of, you know, that first break when they had those early polls, and the pounds put in that ORL and stopped everybody out of their longs. That was all euro pound. That's when the euro got all funky.
All right, well, you guys want to do some questions? Or I know there's a lot on the plate, which is good. This is the best way to prepare.
Matt, hey, you're up. You would
yeah. Hey, one thing I wanted to mention, Ira, is I've heard trader after trader. I've heard trader after trader tell me how much they appreciated your honesty just from an execution standpoint the other day, or maybe last week, when you said that November was the toughest month trading in 33 years.
In 30 years, yeah. And then everybody else, it was interesting because a lot of big traders came out with the results. And, you know, some of the best global macro traders I know, that doesn't make, listen, I don't ever want to perform to how everybody else is performing. If the work is right, and I've underperformed, you know, that's on me. But I think everybody was getting caught in the same, whatever, the to and fro.
The to and fro, which is now defined as trumped. I was trumped.
Yeah. Yeah, we're Trump. You know, and then for sure we'll get what time they're going to roll Cudlow out today.
I think that if the market starts weakening a little bit, then they'll roll them out probably 1:30, 2 o'clock Central.
Yeah, but you know what? They really don't need them because now that the SPUs are higher, the NASDAQ certainly putting in a nice day. Mm-hmm. But the interesting thing, and I'm going to ask you a question. There was one market that never went lower. Well, there were a couple stock markets that never went lower throughout that.
DAX, Euro stocks.
DAX never. Mm-hmm. Yeah, the DAX held. And you know what? And there are a lot of people short the DAX, by the way. I've seen the work out there. So, but and again, the interesting thing is the Euro Sterling, which had such a big move last night, but the FTSE stayed strong all through this too. So a couple things that you just have to pay attention to. And I saw John Authers from Bloomberg put out John Authers and Ambrose Evans Pritchard are two of my really go-to reads that I will take my time. You know, outside of Book Bar and Jimmy Bianco, and Chris Whalen, those are 5 guys that are must-reads for me in that arena. I'm not even enjoying Al-Arian because, you know what, he's too prolific of late, and for him that's not good because it's not like he's really – you can't be prolific with – well, I can be with big ideas because there's still trades within them. But these guys don't write like that, you know, so it's very hard. Al-Arian's getting really – he's too much – he's too all over the place. And so I used to love to go just to see what he was thinking about. Yeah. But – so let's get it right into it. First question. You know, the gold is actually holding up here very nice today too. But I will tell you this, it should, because it sounds like Powell can roll back what he did the other day. Done is done. Done is done. And a few people even wrote about it, that they felt that, Pozar actually did set him up, because Pozar is such a powerful force that he couldn't get back from that. So, and you saw the numbers that came out yesterday. So the Fed is on easier. Can you imagine if Trump would have said, okay, this deal is signed, sealed, and delivered, it's done. And here's a hypothetical, that Powell would come out next week and say, you know what, now that the trade, now we can go back to, maybe reversing some of the, could you imagine what the Fed would look like if they came up with something like that? He can't. So Trump has trapped him, and he's trapped. He's trapped. Trump has totally trapped him. But now, if he realizes and gets angry, can the Fed raise rates next year? Sure they can. Sure they can. But it would be, if I was Powell, I'd raise them. I'd say, okay,
get it over with.
Exactly, and then say, okay, I'm done. I resign.
Yeah, so Ira, I was looking at the, your gold copper. It's really gold copper that's been in play.
Yeah, absolutely, Judd. Good point. But the gold is strong, and copper, which was up strong this morning, but copper is definitely linked now to the concept of a fiscal stimulus, not only in Europe, Britain, and of course, China is making noises, and we know that Japan is on the on the train. The only one who won't be is the U.S. And into an election year, I just can't see the Democrats in the House giving Trump, even though it would be good for them electorally, but they're going to weigh it out as to whether it would be more positive for Trump, which it probably would be because he's the president. So I'm just not going to see anything from the U.S. And it's interesting because my two, and of course there's other ones. There's Jacob Engineering in the U.S. and Fluor, which is just, as we've talked about, and I threw in the towel, and it's just so badly managed. But you see what ABB has done this week and prior to that. So people who are paying attention to it, and listen, it's got resistance here. The most interesting move, because the news has been mixed, is of course on RSX.
Oh, that's been huge.
Yeah.
We were looking at that yesterday.
The fact that we closed over that gap. Yes, I'm sorry. That's stranded one-day island, which for my education is an important thing. So, I mean, we did see some interesting things. And Judd, the point that you make about the copper and the gold and the relationships, that's so important, because even if you're just sitting back and watch how the relationships take place. Watch how the relationships take place. And you start to see there are new correlations forming. And one of the most interesting one may be the emerging markets, currencies and equity markets, especially because commodities. And I know we went through this. You don't get I don't think you have the symbol for the Bloomberg commodity index. Starting to look interesting. And that's with all the, again, the Trump movement. We'll have to we'll have to come up with a new dance name, like they did the locomotion when I was a kid and do the Freddie. We got the Donald. We got the Donald. You just gyrate like what's her name, Elaine Bennis in Seinfeld. You just gyrate. You just kick. You're dancing. I don't know. It's a dance.
Hey, Ira, did you say that copper is linked to fiscal stimulus in other countries except for the U.S.?
Well, it would be linked to the U.S., but I don't think you'll get a fiscal stimulus program out of the U.S.
Okay.
Until I just don't see it, because nobody's looking to help each other here.
No. To
the detriment of all of us, but that's just a fact.
Ira, I got the Bloomberg Commodity Index up, and it's just held the 200-day.
Yeah.
Daily yeah.
It's just starting to look interesting.
Yeah.
Is there volume in that?
Probably not.
I don't trade it. I just watch it. It's an index, so I just watch it. So it seems to chart very well.
I got to look it up.
So So I keep it. But you know what? The Fed is going nowhere. It's interesting. We're getting some. Yesterday, the yield curves moved so beautifully. You know, we've gotten some nice movement. We had this morning the 210. I don't know where it is now, but the 210 was up to almost 25 this morning. So we saw a pretty nice move this week. You know, and everybody was shouting about the gun launch piece because that had a lot to do with it. There's no question.
Yeah, well, the whole thing for me was what the Bunds did, because I kept looking for the Bunds to come down and fill that gap, and they got close. And then as soon as he got down there, that was it. That was the bottom in every single rate worldwide.
Yeah, you know what, Joe? And so many of the rates are trading off of the European because they feel if, you know, people are really starting to start to get out of that, and, you know, maybe, and those curves are starting to steepen from where they were at too. Let's see where the German is this morning. Last time I looked was at 36, which, you know, was down to 13, 14. What's the Canada? Canada's only -3 now. We know that went inverted almost 18, 19. So, and again, so you'll want to start paying attention. If we start to get movement in the commodities, and I'm talking about across the board, we've already seen the Aussie get a pretty good bid. That Aussie-Kiwi cross is great, so we'll wait for the next Aussie-Kiwi bank meeting.
Aussie
that can
rolled over today, too.
Yeah, you know, it's had a pretty good run, though.
It's trying to put an ORL day in. I don't think that's the high, but I think that they just ran everybody out.
And as we talked on Wednesday?
Yep.
We talked, Wednesday.
Yeah.
So
it was
the euro sterling came right down into that Brexit week, right into it. It's, you know, we thought 82, 89. We talked about. So yeah, it overran us because I can't believe that people actually went home short sterling. You know, they bought into the again. I won't call it fake news, but I'll call it questionable news. Hey, what can I tell you? It is.
Like the Liars Club on both sides of the pond.
Oh God, it's everywhere. It's everywhere. Hey, you know what? There's money to be made.
Yeah, it's good for us.
Well, it creates a volatility, but if you're patient, it's good. You'll find great opportunities. But even I, you know, and I preach patience, and I'm so much more patient than I've ever been as a trader. But like this morning with the euro, it took all I could because I was gnawing on my, you know, being out and watching that move and going, and I'm watching the dollar index size up with it. Dollar index is kind of interesting here too. But I still, you know, and when it's interesting, Gunlodge says the same thing, you know, that basically why would you buy U.S. debt? I mean, everybody, I must have gotten 50 emails on Gunlodge. And to some of them were going, did you say? I said, how come when I say it, nobody sends me my words back to me? So then guys stopped sending. So I just get a little, I said, Santelli, there's nothing in there that Santelli and I have not discussed for 18 months. I know, I don't run 150 billion. I wish I did, because I'll tell you what, I know exactly where I'd be striking. I'd make the hunts look like little paupers.
Oh boy, that's funny. Silver
okay.
looks
so
better.
I know
the silver stuff looks better than the gold.
I know, but still the silver gold ratio is, it's, you know, just cannot get going. But if the commodities really become a play, I'm glad you brought that up. That will be a significant mover. The low that we made for the year in September was like 79.70 for. So we're at 87.30 on the ratio. So if that's the case, we should really run. And we're playing with the 200-day moving average, which we were under for quite a while. So it looked like we were going to get some momentum, but didn't happen.
This morning on the low.
But if the commodities are actually going to get some action here, because they've been such a dormant asset class, and I'm talking about them as an asset class, silver then should lead the way. And I emphasize should. Okay, yeah, all right, so let's get to some questions. So.
Well, you've got me thinking about all kinds of different things at this point. What about well, all right.
Yeah.
So that would, I guess that would be a good spot to ask. That first question that I sent you was one of our, he's a really good fundamental oil trader, energy trader, was asking earlier what would be the biggest impetus for 2020 and rising inflation if it were to happen.
That is such a great question, but let me push back. Why do we care?
Huh.
That's the question I ask, and I'm not. It's a very good question, but do we really care about inflation? Is the Fed going to flip around? Don't forget it's the presidential election year. Is the Fed going to flip around? So, because the real stance of Jay Powell has been, if you listen to him, he wants to let inflation run hot anyway, because especially if it's in the form of wages, because the benefit will be to the lowest 20%. And the Fed, I don't care what they say publicly, and I'm not in that room, but I wish I was on some days. They're concerned about the inequality gap. Lagarde talks about it too. So they're concerned as a group. So they are almost in a position where they have to let that actually run a little bit. If the wages are falling positively to the lower rung, it's a good thing. It's a good thing for in their eyes, even though it's what Irving Fisher and some of the other Austrians would call, and I might call money illusion, of course, but they've suffered money illusion with no inflation because wages have just not kept up for the last 30 years. So he's in a difficult situation. Okay, but let's answer the question directly. The answer is yes. There will be, and the energy, of course, will, in the short run, lead, and we do care about it because, again, if it was a Paul Volcker type Fed, they would be raising rates. But they put themselves with this stupid forward guidance into such they locked themselves in because, yes, you could say, well, they pivoted in January. So Ira, they didn't lock themselves in because all the dot plots, which how much I dislike them, were all predicting another 4 rate increases last year, right? Mm-hmm. They left the December meeting. We were going to have 4 rate increases. Well, we know how wrong that was. They are going to err. They're going to let inflation run. And when I say run, what was I? I was reading Schumpeter. Oh, God, I'm going to write that blog, so I'm going to get everybody excited when I do, because he's the best economist. As the Economist magazine voted him about 20 years ago, the best economist of the last 100 years, and I happen to agree with it. But for all those who are erudite and like to read, order Schumpeter's essays.
How do you
spell will not be sorry. It's just essays. His name?
Yeah,
Schumpeter.
Schumpeter.
I'm telling you, I haven't seen it. I was reading it on the airplane going and coming, and there's just so much great stuff. And they're all just individual essays, and they're on a chronological order. I think the first one maybe starts in 27. I'm looking right now. The earliest one is 1909, believe it or not.
It's around
but
Dow
there's
theory,
only a
right?
few. Huh?
Isn't that around when the Dow theory was
I have no idea. He doesn't care. He doesn't care. He taught at Harvard. He came from Austria, Germany. Yeah, and he taught at Harvard, and he was a real ladies' man. He was very dapper. Walked around in really great suits and hats, and had his way with the. I guess he probably would have been in jail today. him and the graduate students, pretty good. But he really is a great economist. So we will, and of course they'll call it if it's energy prices rising, you can already predict what the Fed will say is transitory. That's what the Draghi ECB would have said, transitory, because when energy prices did kick up, he wasn't moving off his QE programs. How Lagarde will approach it is probably a similar vein, but she also would like to get inflation. She didn't talk about the symmetrical inflation. She just talked about the strategic review, which was interesting. I got my notes here. But yeah, so the exact question, I know I got off. I'm sorry. So give me the exact question again.
Was I got to find it again.
Yeah.
Oh, was what would be the biggest impetus for 2020 with rising inflation if it were to happen?
It would be energy. Yeah, and it'll be across the board because natural gas prices have been low, but if they kickstart, and that's why I like to watch LNG, Schumpeter Energy, the liquefied natural gas, because we'll see how U.S. There's so much natural gas found in the United States now, from all the fracking drilling. That's why natural gas prices are low. They're hoping. Amazing when you're a commodity trader, which you have to hope for a very cold winter, so they can get rid of some of the surplus. But if the
a week right now, Schumpeter.
Yeah, I know. Yeah, I'm out of it, but I watch it very closely. CME is actually doing a good job of getting that product off the ground. The problem with liquefied natural gas and the export side is that it really needs a spot market. Most of these have been long. Who talked to it? Robert, we've had this discussion in this room, but part of the problem for the LNG market is that these were long-term contracts because it was the Asian consumers, the big Asian energy companies who financed the building, because the infrastructure for LNG is very, very expensive, both in the plants and where it's shipped to, and then where it's converted and put onto a ship. It's very capital intensive. So the Asian buyers were willing to finance it, but they wanted to be assured that they were going to be having the supply. So there are a lot of long-term contracts written, which didn't really bode well for a spot market. But that's starting to change. And the CME itself, I'm not telling it, it's all public information, has done a pretty good job trying to launch that contract. We'll see where it goes, but the development of a spot contract would be good. It would also help the natural gas producers quite a bit who have been struggling. In fact, I have a piece, as I told you, from one of the guys who I talked to. So that's where we sit. But I think it would be energy, because it would be a sustained energy, which then brings in Russia. Makes it worth watching. And Russia and the Europeans are making very nice with Russia. It's like, Trump has shot himself in the foot in some ways, because the more irascible he gets, people start searching for other venues. And I don't know if you followed the story. If I was really blogging this week, the United States is really pissed about the Nord Stream 2 But the Germans are actually pushing back. They go, the hell with that. We don't care. We basically don't care what you think on this. And therefore, the White House has, done some threats about possible sanctions. You know what? There's a lot of things in play here. Macron, and I'm not a big Macron fan, but I think he is right in the way he's playing the Russia card. So he's trying to play up to Putin. They had the meeting this week. Was one of those things also that was taking place. So it's a good question, and I think it will be energy that leads it. Well, let's watch these indexes, and then I'm not sure of all the weighting, but that's for somebody who's listening to do the work and see what the weighting of all these different commodities is in any index. I don't use the GSCI because being on the floor and watching some of the crap that went on, I don't care about it. So I like to look at the Bloomberg index.
There was another really good question concerning the phase one deal, which seems to me to be so vague, or at least the facts aren't out to it. But what are your thoughts on holding China's feet to the fire? In keeping it, keeping them, adhere to the agreement, whatever that treaty is or agreement is. How are we going to know whether or not China is getting away with anything or whether they're being honest? They misreport everything, and everything is so unregulated there.
You are never going to know. You're never going to know. So you're going to get some, and again, look at the United States. Look at the United States, okay? So we're gonna be guessing. So you can hold them to the fire, but really what they want, especially with Trump, is the optics of it. It's like, I'll go back to NAFTA, which had far more transparency. Do you think they ever adhered to the agreement? No, and that's what the Democrats were holding up the Mexican-Canada agreement, because they wanted more surety about environmental issues, social issues. I mean, that's what they're concerned about. I'm not saying that they're wrong whatsoever, and certainly labor issues. They were never adhered to. Never. You can go look what the Clinton administration did as the lobbyists ran in to change the rules right after it was inked. So it's a nice question, but these things are always difficult. It's not like you're sending in inspectors. So, they'll hear from their boots on the ground from U.S. corporations about, are they adhering to this, this, and this? Have you seen it? And then they'll come back. But, a lot, as much as you think these are signed, hard and fast contracts, they both will read through different loopholes and try to attack them, because that's what you do in every international agreement. Any nuclear arms, right? You sign nuclear arms agreements, but you had to send up 1,000 satellites to take pictures, of everything that you could. And being that I studied nuclear arms agreements quite a bit in the 70s, you would see the photographs when they would get released, and they were getting them from all angles. In fact, when, Reagan and Gorbachev famously sat down, and when Reagan started spending wildly on Star Wars and other types of anti-missile systems, and see, I don't know if you the whole concept of nuclear peace was called MAD, mutually assured destruction, which said that, hey, then nobody would have first launch capability, okay? That's what it was based on. Because if you thought you could take out the other side's weapons and they couldn't retaliate, there was an incentive to go to war. But if you weren't sure, and that in fact you were going to get destroyed, well, there was not. So that's why they were against, the anti-missile weapons, the things, lasers in space that could take out missiles as they were on their trajectories. It was all based on that. And as long as that, then you depended upon two rational actors who said, well, hey, I can't win this. Why would I ever fight it? So when Reagan said to him, we know, and he showed him pictures, Reagan showed him pictures of where all the Russian missiles were. And Gorbachev couldn't even hide it. You know, the intelligence was dead right on target. So he said, and they knew that they couldn't get into a spending because the Russian economy absolutely could not support it. It was already on its knees.
What about, go ahead. So
you're asking me, how are these enforceable?
Yeah.
You know, it's nice optics. It's nice optics. You know, and you can put, but everybody violates everything. So which one are you going to pick on?
Yeah, here. Michael says, with enough knowledge of CCP, not a single chance the Chinese will uphold whatever terms are agreed to. Just look at the WTO, where
great point.
Where there's zero import tax on cars and electronics. Where's the zero import tax on cars and electronics? Here, Angela.
That's a great point, Michael. That's a great point, and that's what.
Phase one does nothing to bring manufacturing back to the U.S., will do nothing to stem the steady secular decline in China. My trades are setting up for the next 3 months.
Okay. It's a plan. And all you do is have to start to see some of these prices to evolve because, again, if you look at the board, you think the market is really set up with that?
No.
Not today, it's not.
No, nobody's looking that far out.
Yep.
Ira, you all were talking about, energy inflation earlier. We were picking that up 2 months ago. I don't know if you recall, but I was basically suggesting that the dollar was done. It was in the midst of its topping process, and here we are with the steady decline. Judd knows, the trade has been buy oil at the low end of the range, sell it at the top end, and just rinse and repeat, and here we are. And now it's starting to trend a little bit. The other thing that I follow is the oil VIX, OVX. And anytime that thing starts to trend below 30, you get a phase transition in the price of oil.
Yeah.
Yeah, and it's below the 200-week. It's below everything. So, yeah.
That's a great point, Andrew.
Yeah, you know what? And there it is for you. And listen, there are people who say, well, it's going up because the Saudis now with the Aramco that may well be, but that was always my issue with the Aramco, because the politics of Saudi Arabia say, well, we can't run it as a company because oil is a political weapon. But now there's people who think that they'll squeeze the market and they get prices higher. Okay, so who do you represent? The Saudi people or the shareholders of Aramco? So it's always going to be a difficult decision. And I'm telling you, it's going to become a very litigious issue because, of course, some activist or investor will say, hey, they're not running the company as fiduciaries. Of course they're not. It's a political entity.
Ira, I have a question about copper for you.
Yeah.
The issues of Chile aside, does rising oil prices influence the cost of mining copper and thus can push the price of copper up?
No, where they correlate, it's because if oil prices are rising and it's not a geopolitical event like an attack on a Saudi refinery, but it's because global demand is rising, then copper gets bid because there's a sense that the global economy growth must be picking up. So, and it's not like copper, probably, let's look at it. It's been range bound for quite a while, but I like to look at the 200 week.
The 200 month, but until I see closes in the Marches over basically today's high, I'm not believing it.
Yeah, well, and here, so we're over the in the last week and a half, we've gone over the 200 week moving average, but the 200 week moving average is 268.40. So, and we're trading 278.40 right now. So, yeah, you know, copper really has not done much, especially it represents, you know, that the global economy hasn't been growing as much, because actually copper has the ability to really take off because of the huge amount of copper used in electric vehicles, from what I understand. So I'm certainly not an expert on how the electronics work, but from what I've been told, that the giant windmills and electric use a lot of copper. So, okay, so these are really, you know, and the economy goes up with it, you know, copper should really stay big. It's a good, you know, as you know, Gartner used to say, it's the metal with a PhD in economics, and that was true for a while. But now, you know, there's so much stuff going on, and where do you find copper? And you know, again, look at Glencore, which is one of my favorite companies, but they operate in some very ugly places, and they do questionable things. So the stock price has really been struggling because of it. But
so Ira,
it's a very good barometer.
I'm looking at I'm looking at a semi-annual chart, okay, in copper.
Yep.
And the breakout's above $3. It's a huge triangle from 2008 till now. And it's still in the middle of it, and it's still consolidating. And when that thing breaks out, it'll get wild. It'll just be like the NASDAQ bonds that broke out on the quarterly, and everybody wanted to be short the NASDAQ and the S&Ps on a quarterly breakout in the SPU bonds. You had to be out of your mind. It's going to be the same type of thing.
Well, so there we have it. And there we know the areas to be patient for. You can trade it on a day-to-day basis when you find those correlations working, but you can't get married to it until it really does what it needs to do. And hey, listen, how high? Listen, when copper got over $4 back in the back in 2011, 12, when we had the great commodity boom, I couldn't believe that. $4 copper. Yeah, I remember for years it would trade between 50 and 60 cents.
Yeah, Ira, I didn't mean to suggest that you know, we should be looking at copper as a buy. I was just curious if higher oil influences the production costs of copper, and thus, you know, the final price. No,
it's not enough.
Okay.
It's not enough. It's not enough in the production process. It's really just not enough. You can get, you know, energy historically is really cheap today. You know, on an inflation-adjusted basis, pretty cheap. And maybe, you know, the question is, it's like, you know, it's like with water. You can do desalination now, and it's really a big thing. It's one thing that the Israelis are bringing, because if you can use solar energy to run the desalination plants, the process becomes much, 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 much cheaper. Because one of the things in desalination of seawater is the cost. It's very expensive. You know, it's like people don't understand the cost of mining Bitcoin. Heavily, heavily energy intensive, and it's expensive. That's why they do it in places like you know, Washington State, Eastern Washington State, where they have the cheapest electricity costs in the world, and the Chinese have built massive Bitcoin mining operations in Iceland because, you know, geothermal energy is cheap. Geothermal power creates cheap electricity. So it's a good question. It's just, I don't think that copper itself is energy intensive enough. Now, to refine it is a different question, but to hunt for it and mine it, no. And it's the same like, you know, the most, it's like aluminum. You know, again, I'll give you the history lesson is that's why Boeing was located in Washington, because to refine aluminum, to make it for airplanes, it required a tremendous amount of energy. In fact, so much when the economy turned down in 2008, the airline manufacturers, the aluminum processors were not processing aluminum. They were making more money selling the energy into the market, into the grid, than they could make in refining the metal. So it's a good question in that regard, but in the mine and search for, I just don't think it's enough of the cost. What else we got?
I wanted to ask about this the huge this big Fed liquidity injection back into the year-end repo to end the year-end repo crisis that Zoltan was warning, Posar was warning about the other day.
Yeah.
What do you think of this? I mean, it just seems like more debt after more debt after more debt after more debt.
Yeah, well, it's not necessarily, you know, that's why we don't call it QE, but, you know, it's really pretty much what we talked about. And I really think that Zoltan got out in front of this for that reason. I still think that was the reason, because he wanted to, he wasn't going to let them dodge the issue.
Mm-hmm.
Can you see what they came out with yesterday?
Mm-hmm.
I mean, it's some big numbers, you know, and some people were really said, "Oh, amazing that they did this the day after the meeting." It's there's a shortage, and as certain people are asking, how can there be a shortage? How can you still be short funds? What's going on in this that we're still short funds with all this capital? And we had the curves move because, you know, he didn't actually say it, and I had to go back and listen to it when he talked about buying coupons. A lot of people inferred 2 years, by the way, exactly what I had talked about with you guys on Wednesday, that they would be buying 2 years because he doesn't really want to commit to the program. So they're going to have to do as much as they can in a shorter duration. But we don't know that. We just don't know. But no, they'll make as much money available because now if they get a severe spike, I mean, it's already spiking. And you just can't help it. And, you know, the regs are what the regs are. And as somebody reminded me in this conversation, years ago, being that I used to trade lots of Swiss francs, and I learned the hard way too, because Switzerland years ago, in the 70s and 80s, had a banking rule that the banks had to be in balance, assets and liabilities, at the end of the month. So this used to occur in the Swiss forward market every month. And I was doing a lot of Swiss trades and a lot of arbitrage, and I got blindsided a couple times until somebody sat me down and gave me a 2-hour lecture on what took place. So then I'd at least be prepared for it, and I would plan accordingly. But sometimes those funds would spike to 100% overnight rates. I mean, it was just that, but the Swiss bankers were making a fortune because they knew about it and they knew where all the shorts were. But once more people like myself learned about it, then they stopped doing it. They got rid of the law. It didn't make sense anymore. But they did very well with that. So because for year end you have to be in balance, there's a natural spike to it. But the Fed is really afraid that they would have a September 15th, 16th on their hands. So they are doing everything they can to ensure this. And a lot of it is Posar really, he put it out there for everybody to see, you know, and to discuss. And I don't know, because I would, you know, again, I was in a meeting, so I didn't get to listen to the press conference. I just got a bunch of emails and stuff about it. So I don't know if somebody actually asked the question. I'm sure that they did, but they're set to pump in as much as they possibly can. That's all I can say. Today you have a little retracement, of course, in the curves from the dramatic moves of a couple previous days. But again, and let's go back to the fact, the Fed's committed here. They're committed to this. Mm-hmm. They're committed to as far as I was concerned, battling symmetric inflation. Oh, we've been under 2% for 8 years, so if we go a little bit hot, so that keeps some ease. You know, that's the forward guidance that I can't stand, but they've committed to it. They're committed.
Ira, from what I've read, in addition to the Basel rules, the post-Dodd-Frank, banking rules, the liquidity rules, et cetera, once they all voted to raise the debt ceiling, roughly $1 trillion of new paper came to market, and the non-bank primary dealers were already choking on it, and they were struggling. So
that's what
So there was a multitude of factors, and then speculation that one or two banks, may have been having funding difficulties and all of that. But I think it'll be interesting to see, if this thing carries over into January, all right? Because I think everyone, correct me if I'm wrong, seems to be thinking that this might fade at the end of the fourth quarter, December 31st. That seems to be like the knee-jerk reaction. But I don't think so.
We're going to find out. You know what? Zoltan doesn't think so either, as long as a few others. So we'll see. We'll see. There's a lot of people guessing at it, aren't they?
Yeah. And there's no way to actually put your finger on what the actual problem is. It's probably a multitude of factors, just all coming to a head again,
It probably is. Let's see something.
But if it continues, the Fed ain't got no exit strategy on this one either.
No, that's the issue. Absolutely. Well, yeah, that's the issue. Of course it is. But yes.
Well,
that's the scary.
Well, but that's what.
And I think Danielle DiMartino Booth said the other day that this non-QE4 QE4 has basically reversed the balance sheet runoff that they did since last year.
Totally. Yeah. Which, again, I go back to Druckenmiller's comment about double shotgun approach, and that he warned about it. But you know what? Again, here's my problem with the central banks. They don't respect markets and the signals that they tell them, but they fear markets because they don't want to be saddled with the reaction. But they don't respect the signals that they get from the market.
Now, at least Paul Volcker, recognized that he needed to take action and the correct action. Who was it? Was it Greenspan that said, we'll just deal with cleaning up the mess afterwards?
Yeah, that's a famous piece put out by Bill White. Do we lean or clean? If you lean, you start raising rates ahead of time to get ahead of it, or because Greenspan said you can't identify bubbles. And Bill White raised the issue in his paper when he was at the BIS, as the chief economist of the BIS said, and Bill White is another guy who writes really well thought out stuff. And I think it was 2006 when that paper came out. And he was really speaking to Greenspan. Greenspan was already gone, but that, hey, if you can identify it, shouldn't you end the bubble? Because Greenspan's view was it's easier to clean it up, and that certainly was Bernanke's view. But, Volcker, here's the difference between Volcker and what we see as central bankers. Volcker's made the market fear him. All these other people fear the markets.
Yeah.
Hmm.
Yeah.
Think about that, because
Ira, can you imagine
that's the key.
if could you imagine if the Fed had the humbleness to call in all the experts, the Ira Harrises, the Jim Biancos, the Peter Bookvars of the world, the Posners of the world, call them in and go, hey guys, what do you see going on and what do you think we should do about it, since we're clueless?
Here, Ira,
Well, they do have
something. Let me read
they
something.
do have a committee, by the way. They have the Treasury Borrowing Advisory Committee, the TBAC, which advises them about, which, do they issue more long-term treasuries? So they do seek advice in some places, that's what the I'm sorry, that's not the Fed, that's the Treasury. But the Fed, I believe, sits in on those meetings. But they have such a huge staff, and I'm not saying that they're not a capable staff, but Volcker did what and the markets feared Paul Volcker here, and and through that fear they learned to respect the Fed, and don't forget, every central bank right now in the world is living off what Paul Volcker did, which is he showed you. Oh, okay. All right. You're going to force me, so I'm going to read you from Schumpeter. I'm getting ahead of myself. Let's see. Okay. This is from a piece that Schumpeter wrote in 1931, and I'll explain to you why I'm reading it to you. Let's see. Okay, this is one paragraph long. The fall in short-time money rates, now this is written in 1931, has for various reasons not been followed by a sufficient fall in long-time rates, okay? So the curve steepens, which fact must delay the emergence of those activities which usually precede general revival. The importance of this element must not, however, be exaggerated. There are wide strata of industry in all countries which, in a depression as severe as the present one, would not borrow even if credit were offered to them for nothing. It is easier to dampen prosperity by a high rate of interest than to alleviate depression by a low one. That is the concept of pushing on a string. And that was Schumpeter, who, when he was writing about in 1931, the depression had set in, of course, and he was talking about it and what monetary policy could do. So Paul Volcker showed the asymmetrical nature, which is what that says in academic terms, that interest rates are asymmetrical. I can get you to stop borrowing by raising rates high enough. I cannot get you to start borrowing if you don't think you can make money. Why would you borrow money if you can't make money? So, Volcker, and the banks are living off of that. But Bernanke set the scale a different way, because even before he was chairman of the Fed, he did a lot of work, as did Paul Krugman. But Krugman's work on depression economics was actually really good. And in Japan, his work was really good. I really liked reading him in the 90s before he got a soapbox at the New York Times and has been speaking, and it undermines his, to me, his credibility, because he came out with a piece recently talking about how wrong they were about so many things of late. So it's because you can stop inflation, and that's what everybody said, but they don't know how to get prices rising. And there's too much noise. We are not in the deflation period. In fact, okay, I'm going to pivot away a little bit, because we're going to talk about Lagarde's first speech yesterday. which I did listen to, her press conference, which was, I thought, very good. She was very forceful and straightforward. And one of the key things that she talked about, because somebody asked her about, will Europe suffer Japanization? And she very forcefully said no, and I have to agree with that. And again, we've talked about people throw that around. Oh, Japan had real deflation. Tell me where there's deflation in the world right now. There could be things that set it off. Well, you're not in a deflationary environment. Europe has inflation. And the key to understanding inflation, of course, is negative real yields, right? That's the key. That'll tell you. If you have negative real yields, the bank is trying to buy insurance against the onset of deflation. And Europe doesn't have deflation. Draghi used to like to throw the term around because it justified everything he was doing. But you don't have it. And I love that she said that. You know what? This is a different thing. So I know that was a long way to answer that question, but there's no simple answer to that. If I gave you a simple answer, there'd be no context in it at all. So it's not a simple answer. But the central banks are so fearful of what Bernanke, saw in 1937, that they will go to any extreme to prevent it because they do not want to own that. Which is why they're fearful of the markets. Again, the worst mistake that Bernanke, and he made many, but the worst mistake, of course, was backing off from the taper tantrum. Because had he started down that road in June or July or September of 2013, they would have been far more successful in starting to shrink the balance sheet. But they waited way too long because he was so afraid by what he saw, the market reaction in June of 2013, in May, June, and July, that he backed off. And it was a gigantic mistake. Why? Because he feared the market. Okay, if the markets they were already on the rise, they would have worked themselves out. We've seen this before. 1995, when the Fed, 94, 95, when the Fed was busy raising rates. Now, other things fell off from that, but, again, respect what the markets will tell you, and you'll run a much better effective monetary policy. If you just keep, the Greenspan put is it's a gigantic mistake. Gigantic mistake.
All right, we got a couple of comments from Phil. I just sent you his email. Take a quick look at it.
Oh, hold on. I was busy looking at the chart you sent me.
Yeah.
Let's see.
Yeah, and the other thing,
Phil, dial in using your telephone.
Yeah, and then the other thing I was looking at, the 10-year bund, which went to 50% of the gap when the bunds went to tried to fill its gap this morning and missed it by like 10 ticks, and that just goes to
on which one? I'm sorry.
Well, I was looking at the 10-year, the U.S. versus the bund.
Oh yeah, I just put that.
Right to the half of the gap. So, I mean, the only reason I bring it up is because guys that are doing their work and they're trading those debt markets really have to look at all the spreads and not just the individual names or whether it's the Italians or the bunds or the U.S. market. Take a look around at everything that's going on in the that affects it. That's all. Mm-hmm. And then David was also pointing out euro yen. So go ahead and respond to Phil, and I'll put that chart up too.
You know what? I don't know what to respond to him. I mean, I just read it, and this is, of course, is what has been the issue plaguing the U.S. since 2001 when China got into the WTO, and this is what drives Bob Lighthizer nuts, and he said it back then in real time. You know, he was opposed to them entering WTO because he just didn't think that there was a way to monitor it. But, and Phil will notice, you know, saying what he says in here, but the American National Association of Manufacturers, the Business Roundtable, they were all in such a hurry. And if we go back and look to see all the books that were written, right? 1 billion customers, book after book after book, they were in such a hurry to try to sell to the rising Chinese middle class. They were willing to accept anything.
Yeah, here's the other thing he says here. Not to jump topics on IRA, but you'd be amazed at the U.S. companies that get lawyers to write letters to the ITC because they want those cheap China goods. That's the amazing. Yeah. He doesn't have a mic.
Yeah. Okay, but so
He's got it now.
And they were in such a hurry. So what was Lighthizer? Lighthizer was really upset back then because companies and unions he was representing knew that they were going to be on the short end of the stick. But it was the Clinton Bush people, insiders, they just wanted access to those 1 billion consumers come hell or high water. And they sold their souls. Let's go back and look at what's his name with the satellites. When in 1998 was that big case, 98, 99, when, what was the name of that company? Iridium, I think. And they were in a hurry, and they gave away the shop. And people said it then. So you had a mix. And so as everything else, when that group rises, they got what they wanted, and everybody else suffered under it. And again, Walmart and everybody who was pushing Chinese goods out the door were doing really well. And Phil's 100% right. And they kept pushing on it. And, there's really a lot out there that was written. This is not new, but this is what pushes Lighthizer's buttons. And where this begins and ends, we're finding out. But now we got the politics involved in it. And to me, you know, the Trump team, you know, again, we'll go back to what he did to Brazil and Argentina with those ridiculous comments. But as I said at the time, it reflected that he's upset because he thought this was going to be far easier, that the Chinese were going to automatically step in and buy a lot of goods because they need agricultural goods. And okay, you know, he could take the short-term hit like he did in the 2018 congressional elections because, listen, he lost seats in the more ag-oriented districts, but now they're worried because if the ag sector continues to take the hit, that's the Electoral College, my friend, and he can't win it. That's the Electoral College. He needs, and the Chinese know it too, he needs something good coming out of that ag sector. So I'd like to hear Phil respond to that, you know, as long as he's been in the middle of this process. So
I'm here, actually, if you can hear me.
Oh, yeah, we can hear you.
Yeah, I can hear you.
Okay, cool. I don't see agricultural. I just see construction goods, typically.
Okay.
Typically, mostly things related to ceramic tile, stone, any kind of construction.
Okay.
I see reports on, you know, the old this same thing kind of happened with Chinese drywall a while ago. But I see all the allied goods that go along with sound control and flooring and underlayments and whatnot. And China had taken over that market drastically. And as Judd mentioned, when I got back from DC last week, you know, we did all this work to take something that used to be 80 cents that now, you know, is a minimum of, you know, 240 minimum. So that puts it in line with American manufacturing, to see how many American companies then got lawyers and wrote to the ITC to remove the tariffs because they wanted their cheap 80-cent Chinese tile back. You know, and so you end up fighting that battle now. And so once you tariff that, well, what do? They go, okay, well, you just tariff that, and then you're reading the reports and you see that fall off a cliff, and then all of a sudden they go after everything that goes along with it. And that becomes very difficult, because now you have, you know, underlayments, cements, you know, grouts, mortars, all these different types of things that are in different product categories. And now you have to get basically all the national competitors in one room together who to compete with each other, and get them to not kill each other, and then get them to agree to all form a coalition, you know, against China. And then to do that, they have to somewhat reveal some reports that each individual company doesn't see, but the ITC does see. And then there has to be some proof that there's not necessarily damages, yes, but damages in a manner of such that doesn't have to be just monetary damages. It can be, you know, reputational damages and whatnot. But once they convert to doing that and using Alibaba, which they do famously, as soon as you capture one IP address and you shut one IP address down, they pop 6 more up.
So, oh, of course, yeah, that's it. But Phil, and that was a good point. And I know this because I'm just finishing up a major construction in Arizona, and I was forced to buy certain countertops, whether I wanted them or not, because of the fear. Because, you know, the people I'm buying the stone from, it's all emanating, well, not all out of China, but the tariffs were certainly driving it. And they said, we can't even guarantee you're going to get this. So, you know, you had to settle ahead of time because of the unknown. But what Phil is speaking to, you know, Lenin famously said that a capitalist is somebody who would tell you the rope that you would hang him with. And in essence, that's right, because listen, the greatness of America is its capitalist system with its openness and the ability to compete, and you have people competing. But when and that's that book by Douglas Irwin, Clashing Over Commerce, which is such a great book because it's the history of tariffs. The United States has always, you know, been involved in tariffs. Hell, we fought a civil war, which I would argue was as much about trade policy as it was about slaves and how they ran together anyway. So these are not new issues. What happened, though, with the Chinese is that everybody wanted access, and the Chinese knew it, and they were willing to sell their souls. And they're still selling their souls for promises. But the Chinese are not stupid. I'm sorry.
No, Ira, you hit the nail absolutely on the head. Is when we, first off, you know, the court systems can take forever. So the beauty of the 337 cases is that they bypass the court. They go directly to the ITC, and the ITC makes a determination. And I'm really simplifying this thing. Make a determination, and then that goes right to Customs and Border Patrol. And it's just basically, if you see any of these goods classified this, they're tariffed. Done. That's as simple as that. The problem is the short-sightedness. We had done this to protect American companies and American infrastructure, but to then see the short-sightedness of companies go back that are so somewhat have elected or have made you their representative to protect them. You go protect them in the form of a tariff, then they go back and write letters to try to remove what you have put in place to protect them. And what they don't understand is that is how China tries to tear down the American economy. Because if they can get their hands on, just take, for example, one $300 million high-rise building, just one building. If they take one and they're going up everywhere, wherever you live in America, you see them. Take one of those buildings. All somebody has to do is a general contractor, whomever, they can think they're going to save themselves $250,000 by finding a product that's got a ripped off trademark name on it, looks like the same thing. China even shows the manufacturing process of some of it, you know, on these domains. They think they can buy that and make a whole bunch of money really, really quick. But what they don't understand is China really doesn't want to fulfill it. They would rather stall that job. They would rather cause that bank loan to default. They would rather kill the growth of the economy by controlling how it can expand and grow, by controlling the construction materials, by literally not shipping them, by putting you in default, putting your job behind schedule, putting everything. You're talking a building like that might have 7 or 8 banks behind it. So now you have, you know, defaults going on because there's no materials. Because why? They got them counterfeit out of China. Well, China doesn't ship them. China often just takes the money and runs. I mean, they falsify reports. They falsify data. American companies then go open up over there with Chinese branches. They leave Chinamen in charge of the American company in the Chinese branch, so to speak. And then reports come over here. I get my hands on them. I send them to the American-based head corporation. They get in touch with their Shanghai branch, and their Shanghai, and it turns back that the Shanghai branch doesn't even, this report doesn't even exist. It's just falsified. And so the idea is that what they're doing is they're trying to stop the growth of the economy through the means that I've said. Not necessarily to be able to sell the goods, but just to try to get the American person to buy the goods so they can take the money, then not ship it, because now the American company has no recourse. And then that causes massive defaults that affect the banking system.
Well, you know, I can't speak to all. I mean, that's you're speaking. Yes, I just don't know enough to speak to that end of the business. But here, as we're talking here right now, these are headlines coming across. They see the deal signed first week of January. This is all from Lighthizer, so I give that much more credibility. They have 2-year commitment on agricultural purchases. U.S. sees China signed in Washington. U.S. pays one deal completely written. U.S.-China deal effective 30 days after the signing. So Lighthizer's talking. I give this far more credibility than anything else I've heard today. Lightheiser says U.S.-China deal likely signed at his level. Okay. China made 2-year commitments for 40 to 50 billion. China 2-year, so that's 25. So that's why we got those different headlines. Specific U.S.-China deal agricultural targets. So Trump wanted the agriculture. Now, let me say this to you, little Phil. In 2009, GE Chairman Jeff Immelt, who I have next to no respect for, never did, never will, and I'm not a Jack Welch fan either. But he said back in 2009 that GE was pulling up stakes on a lot of their China production because they just couldn't make any money. There was they left nothing on the bone for them. There was nothing. They went there expecting to make all this money. And then when I remember reading that story, I said, well, I know that there's nothing good that can come of this. But I had actually talked to people several times, real estate deals in China, and I would say to them, why are you going over there? They never could get their money out. They were always rolling up to the next project. So, I mean, this has been a long, drawn-out affair. Again, I'm going to wait to read what Lighthizer says, because Lighthizer is the only one who I give any credibility. I've been very consistent about that. The rest of these guys, I don't care, because he's been on this long enough that if he's satisfied with something, okay, then at least he feels something there, because he's just not settling. He's been tenacious about this long before he was in the Trump administration, so he's got a history. You bring up good points. There are things to be wary of all the time. The United States chose to go alone on this. I think it was a mistake. That's the only thing that I would say. I thought that they would be stronger, except that, again, Europe is always interesting because it's hard to get the coordination that you need.
Well, you know, you know, along the lines, I'm not going to mute out here because I want to hear what you have to say on other topics. But you mentioned, you know, 2008, 2009, and what was very interesting prior to the lead up to that was from 2003 to 2006. One of the biggest issues was that China and India were consuming basically all of the world's Portland cement. You could not get Portland cement from 2003 to 2006 because China and India were building their infrastructure. And so there was a period of 2003 to 2006 where a lot of jobs started to go in default because they couldn't get Portland cement, which is the basis of everything, really, because it was all being consumed by China and India. And that, I think, somewhat was, you know, knowing what I know now, looking back on that, was kind of a leading indicator of times to come. But I appreciate your insight, and I'm going to go ahead and mute out, but I'll be here if you.
Let me tell you one. There's a story. It was a big league in the FT back in I think the late 90s. The Chinese had bought from Robert's going to laugh at me, my German ThyssenKrupp, the big German conglomerate. They sold the Chinese a steel factory, but the Chinese had to come and dismantle it in Germany and ship it home. Well, they did. And the story in the FT, it was a huge, it was a big story written up, was that the Germans were so impressed because they took apart an entire steel factory mill, boxed it up. And the Germans were amazed because they said, first of all, we could never work like this because we'd be shut down due to regs. Because they walk in there and they've got all these Chinese workers hanging from ropes, doing things that were so dangerous that the regulators, they wouldn't have ever allowed it. They boxed it up and put it on ships and sent it home. And what they left was a pair of boots made in China. That's what they left. That was all that was left.
You know, that's an incredible story. But you know, I will just add, you know, along the lines, during that time frame, you know, China has always had a population issue, clearly, and they had a law, and whether or not it's still in effect, I don't know. But back in this time frame we're speaking of, they had a law that said, and I believe this is kind of where the heart of the true Chinese government takeover, so to speak, kind of came into play. They had a law that said, if you have a machine that is doing a job, remove the machine, give the job to a man, and we will subsidize you. We will give you money.
Yep.
So they removed all their assembly lines in Chinese factories. And they had these little, I shouldn't say little, these Chinese guys literally taking things by hand and putting them on hand carts, moving them from one place to another, just to give that person a job, where prior there was just an assembly line that moved it, until China instituted that if a man can do the job that a machine does, remove the machine, give the man the job, and then we'll take care of you. And that was the start, really, as I seen it.
Yeah, well, that's the point. And see, but you make China is most concerned because that came from, and I actually know about that. So the important thing was to put people to work, because they had all these people in a 25-year period move off from rural areas to cities, and they had to make sure those people were working. That was their greatest fear. They had to be fed and they had to be working, because they did not want millions of people moving off. And when you talk about China, you're always talking in terms of 20, 30 million people. And you know, and that's one of the marvels of China, because China did this in 30 years. What took the United States probably, you know, we didn't get the mass migration off of farms. It's not that long ago, by the way, you know, up to World War II, really. And you had to have jobs here. So it's the industrial prowess in the United States increased, they could put these people to work. But, you know, during the Depression, it was not good times because you had all massive amounts of people who had been relocated because of necessity off of farms into urban areas. And, you know, it's a very difficult situation. The Chinese weren't, don't forget, they were in profit mode at that time when you're talking about. So, yeah,
right.
So what if I, right? I don't care.
Right.
About
No, you're right on it. You're right on it. And just because we could have this conversation for an hour, but just to speak to that effect, and then I'll mute out. And of course, I'm interested in here. What they did was the guy that was a farmer, the Chinese government went to the farmer and said, "You're not growing agriculture anymore. You're going to make these little plastic chairs now. And we're going to set up this factory on your land. You're going to make these little plastic lawn chairs, and we're going to ship them to Target and Walmart." And then they took all these farmers in the middle of nowhere that were growing crops, then all of a sudden literally built them factories. And the growth of when I was young, you couldn't go to a Joe's hardware store on Sundays. Everything was closed. It was before Targets and Walmarts that you had to get things that you needed for Sunday. Then Targets and Walmarts came. When the Targets and Walmarts came, you know, that business model is another story. You know, they take out the local businesses first. And then, of course, once they do that, they go after they create the super Target or super Walmart, and then they go after the grocery stores. But that's another point. But the point of the matter is that was all created by Chinese imports, by China, the low prices, by China going to the agriculture people in the fields, as you were speaking to a minute ago, and saying, don't grow those vegetables or those, you know, or whatever you're growing anymore.
Right.
Make these plastic table chairs, and we're going to ship them to. And that's how it all started. But thank you, Ira.
No, that's right. All right. Thanks for your input.
My pleasure. If I hear anything else, I'm sure I'll learn something new over the next couple of weeks. I'll be sure to let everybody know.
Well, nothing's more stark than how they build their roads versus what goes on in Chicago.
That's funny, Judd.
It's incredible. I mean, they build a 6-lane highway. They come in with machines and they build it, and it's laid right away.
Yeah,
it's not like, hey, they're repositioning guys to go repositioning guys so they can have lunch and come back in 2 or 3 months.
Well, that's the beauty of a centrally planned economy.
Well, let's go back to Lagarde, because you know my stance was that, you know, I was, as I said, I was turning more positive on Europe, and you know, and again, it was a relative trade. People, you know, because I got pushback. I said, you can push back all you want. It's a relative trade. It's some interesting how many people are getting on the relative trade. But we had the DAX going out pretty strong for the week after looking like it was, you know, negative. But Lagarde was really good. Because first of all, she was so freaking clear, and she said to the media, "Don't judge me." You know, she was very adamant about it. Don't judge me against the predecessors. What was done, and that's in place. And what did she say? She said, "I'm an owl. I'm not a dove or a hawk. I'm an owl." So I love that comment. And then, you know, she's going to get her fiscal stimulus. Now, she was out today. It was interesting because she's out today pushing for.
Ira, you're fading.
We can't have a strong financial infrastructure if we don't have, a harmonized banking system. What was it? She came out with that today. It was a very strong line. Hold on. Oh, let's see. I'm sorry, I'm looking for it.
By the way, while you're looking for that, they marched Kudlow out. It was on CNBC.
Oh God!
He just finished.
You can't make this stuff up, can you?
No.
Oh, she's pushing for a banking union because, and it makes perfect sense. Because once she knows of a banking union, that's like the U.S. having FDIC insurance, because then the Germans are really in, because they don't have a guaranteed banking system. There is no real banking union. It's all on an individual basis. So we saw what happened in Cyprus. We saw what happened in Italy when bank. So she wants that, and she's really clever, and she knows it can only be done with a unified financial system, which means a bond. So if you listened to her yesterday, it was quite interesting. And I said, she spoke basically, if we remember, we had, when Prime Minister Abe was elected, he had his 3 arrows, which was structural reform, monetary stimulus, and fiscal stimulus. And that's what Lagarde put up yesterday. So she was more a politician than a central banker, but she was very forthright in the way she handled the media, which is, don't ask me those questions, and don't start comparing me. Well, they did it this way. I don't care, and I'm not here to challenge what came before me. What is that exactly?
Just said that Germany does not need stimulus. The headline that just came out. One of the guys in Europe just put that in.
Yeah, that's good. It all depends. Tell me who it is, and I'll tell you why. So she said there's no Japanization. She said we will not revisit the past, which I thought was great. So whatever done was done. Don't worry about it. We'll live with it, but we're going to undergo, and it's going to take a year. She said it'll start in January and go basically to December of a strategic review, because it's been 16 years since they've done this. But she is really on the march here. Now it all, some of it flipped out today, meaning because with the news about the tariffs and where we're going here is done. So a lot of stuff reset itself after that. But she was looking to, she didn't know what the result of the vote was going to be in England, but she was happy to at least get that out of the way and get some clarification about where they were going to be going. So she did a nice job. I really, I hate to say it, but as my wife will remind me, if you want it done right, send a woman. She said, I'm so done with Draghi. I thought he was an absolute, and she inherited a disaster from him. She'll find, which she knows. But she really laid the ground for fiscal stimulus, as Draghi tried to do, but he was too busy piling on more and more QE, and I thought that undermined him. It's the same thing as Bernanke when Chuck Schumer famously said to him, "You're the only game in town." Bernanke should have automatically stepped back and said, "Well, I don't want to be the only game in town, because that means that monetary policy is fiscal policy, and I'm overstepping my bounds." And he should have forced Congress and the administration to actually take up a fiscal infrastructure and I don't mean shovel-ready projects, but of significance. But as long as he was willing to do the work, and he had bought time, and remember, that's what good central bankers do. They buy time for the system to correct itself. But she said she'll talk about all in the strategic review. One of the critical points she made was that they will discuss the efficiencies of all instruments. So I'm expecting, well, we may have to wait a little longer than I thought, but she'll start rolling back the negative interest rates because it's just not healthy for the system. And she thinks that she can get a Green Deal done. I happen to think so too. Who said that from Germany? And I can tell you whether I
Weidman.
view it with it.
Yeah.
Oh, Weidman said that?
Yeah,
what was he? I was kind of, so now he's pushing.
Weidman is saying Germany does not need stimulus. Headline just now. Kudlow is calling for surprise to the upside with fourth quarter GDP data.
Roll them out. God. You know, if it wasn't so sad, it would be funny. But wow, roll them out. Roll them out. And you know, and again, some of the data we've seen, today's retail sales numbers were not good. Got very little play because there's so much other news. Yesterday's okay, but jobless claims jumped dramatically. It's just, but now we have to concentrate on monetary policy and what the effect of what the central bank has done. And I think you got two banks who are possibly going different ways here. And you have Lagarde, who understands what she's supposed to do. And I think it was very clear. And she knows what she's facing. Weidman came out, I can't believe because he's been so, he's been very owl-like, meaning he's been speaking not just but with some wisdom about, and listen, when he actually apologized in a very public way to Draghi, but I guess he must not have liked what he saw yesterday from Lagarde. But she knows what she's got, and you know what? She actually needs Merkel to step up here because she'll use the leftward push by the Social Democrats because they'll be on a fiscal stimulus, but she's got to be careful here. And she could really use Merkel just to be strong so she can get some of these things in place. She needs the banking union and she needs fiscal stimulus, but the banking union will come with the Euro bond. So this is all tied together. But she's trying to do this through a massive green infrastructure program, you know, because it's got the right sensitivity to it. You know, let me put it like that. So this is what we're, yeah.
Can you take a look at the rollover gaps in the European debt market? Just because
again, let me see. I'm going to put up the
run that through my head. It's like, you know, take 2 aspirins, give myself a colonic, and go to bed. I'm trying to sort it out, and I can't quite do it.
Well, again, you know, Judge, where we used to see these, and they meant more. These are all because there's different coupons, so they price differently.
Okay.
You know, so the March oat, you know, I'd have to see exactly what the coupon is. Okay. Relative to one that just expired, because you know they always trade to and that's from the previous, you know, from the last auction, depends what the coupon offering was. So, you know, I don't make as much out of these as I used to.
Okay.
And I'm looking at the oat. So let's go back to the March expiration. Look at the gap between, you know, and we've just never. And a lot of that is just the coupons that they use. You know, we used to get that in the Board of Trade when there was, you know, Board of Trade treasuries, because when they would change a coupon, so if the previous coupon was 6%, and then there was a coupon of 8% at the next listing after the expiration, there'd be a bigger gap than we'd ever seen before. It wasn't just, you know, an interest rate differential gap like you will always see like in the currencies. That's why those gaps occur. Because, you know, it's again, so I'm trying, I don't stress on them as much. And I know, you know, we learned from the same fountain. So, but I just, and there's not enough, I don't have enough knowledge about the gaps, the coupons.
Okay.
I don't have I just don't, but I don't stress about them. I really, if they fill, they fill. Yeah, because you can go look at the March expiration of this year and look at that gap, and that's just, and you'll see it. Yeah, and you can see it. It's just never, you know, sometimes we do, the currencies will be more, because that's a consistent interest rate, doesn't have to do with coupons at all. Again, an interest rate differential versus something with a capital asset. Whether we like it or not, it's just the way it is. there was one more. Oh, be aware of this for next week. Okay, next Thursday is an important day because the Riksbank, which is the Swedish central bank,
Right.
meets. Now they're on record that they're leaving negative rates and going, that it's been a disaster, okay? So I don't know whether you get EURSEK. You get the spot, the Swedish spot?
Yeah, it's up right now. The Corona?
Okay. Yeah, forget the Corona. Put up EURSEK.
Okay, there's a EURSEK right there.
You see it?
Planning trading this or what?
Well, yeah, we used to. So I know about it. You can actually trade the IMF. I believe there's an IMF product. I don't trade it, but I watch it. This is very important. And you can see this. So you see the EURSEK. Well, this is the Swedish krona gaining on the euro as it goes down, right? You see
Right.
it?
Yeah. Oh,
This
yeah.
Okay. So this is
corner.
an anticipation on the daily, but hold on. Let me take a look at the weekly.
The quarterly is what's in.
Yeah. Let's see. I'll put it up. Yeah, you're doing it. You have an outside universal quarter. But this is important because if the Swedes actually announce that they're going to zero, it may turn the tide against the dollar. And I stress may. So it's just something to watch because you're seeing this movement, right? I'm not making this up. You're seeing it right there. That's anticipation. So this meeting takes on an added importance for the Riksbank. Now you go, well, who cares about the Swedes? Actually, you do care about the Swedes when it comes to monetary policy. They put that forefront on things that play out in the realm of central banking. So hold my feet to the fire because sometimes I'll forget. Let's see. What's my scheduled book look like next week?
Well, yeah, and you got a lot of things going on Thursday besides them, so it'll be a big day.
Yep. So it's a way to catch the euro because if they do this, the euro may rally, put the next leg of the rally in. Okay? So pay attention because if they're willing to do it, Miss Lagarde will be watching.
Okay.
Okay, so that's your list. But you see, the week is, now that the S&Ps are what, so now who they're going to roll on next because now we're unchanged. But unchanged with all this shit that came today isn't necessarily a bad day, you know what I mean? It's just, okay, unchanged.
We
Really?
major targets today, Ira, in the S&Ps. I mean, and you double top.
Yeah. Oh.
So it's a major target, not a small thing. I don't know what it's going to be, but I'm not buying straight.
No, and we're going into year end. You know, now we got 2 weeks left, and are they taking money off the table, or are they rushing to mark the books for the? You know, that's really going to be the question that I'm going to be involved with. But you know what? It's been interesting too with the S&P bonds. We actually at least broke out of that range. Well, here. We went and challenged that high made back in April. I'm just looking at it and I've been watching it, but we still have that high that we caught from October of 18, the all-time high in the S&P bond. It's still there.
Yeah, I'm pulling it up right now. I just had to put up the right spread bar.
And we were in real time on top of that one. So that's,
yeah. And it's above those two highs and just sitting there on the monthly.
Yep.
And it's right at the reversal low. So yeah.
I'm surprised that gold is going out on its highs today after all is said and done.
Well,
but it is. Huh?
the silver miners look good.
Yeah, all the miners have actually performed well. Listen, Freeport has done very well. It's had a very nice little run here. I don't own any. All I have is a damn Glencore, which the politics is just killing me. But so be it. God, if you made money this week, applaud yourselves, because this has not been an easy week. It shows that you traded with a lot of patience. I've had an okay week, nothing great. Up until this morning, it was good, but I got trumped.
We had a decent week. Yesterday was nice, but you know these are not markets. Yeah, it was, and these are not markets these are markets with quick reaction. We have to react quickly to the setup. If you don't, then you're going to miss it.
Yeah, there was that song from the '60s, "Psychotic Reaction." That's what this reminds me of. These are all psychotic. Psychotic react. All right, everybody, have a great weekend. Boy, we covered a lot of ground this week.
Very good.
And again, if we start out with the questions, I think it comes a lot smoother. We'll cover more ground.
Yes, absolutely. Very good. Thank you, Ira.
All right, thanks, guys. Okay.
Have a great weekend.
All right. Okay, you guys too.
Right. You done recording?
Stop. I hit